Right?
So you guys should be able to see my desktop here.
Yes.
All right, perfect. So good evening, everybody. Thank you for joining the Wealth Mindset and Real Estate Investing virtual meetup. My name is Chris Price. I'm the host of the Wealth Mindset and Real Estate Investing Meetup, and I'm also the CEO and co-founder of Red Fox Multifamily. Now, the Wealth Mindset and Real Estate Investing Meetup is open to all who are interested in growing generational wealth through passive real estate investing and increasing their financial intelligence. This meetup is for the busy professionals and retirees across various industries. The individuals in this group make a good living, and they have discretionary income to invest in real estate for its proven wealth building power, but they don't necessarily have the time, skill set, or network to do it at speed and at scale. This meetup focuses on helping us all grow our wealth mindset by learning how to build and preserve wealth while developing and maintaining an abundance mindset. The meetup will focus on multifamily real estate investing as well as other proven ways to build wealth through real estate passive investments. So, and Red Fox Multifamily works with investors who are dissatisfied with the low returns from savings accounts and bonds, and investors who are concerned about the volatility of the stock market. Red Fox Multifamily puts discerning investors' capital to work by working with them and investing in exceptional multifamily properties in the best markets nationwide. Demand for multifamily rental units continues to grow and is driven by both the preference in certain demographics and as well as unaffordable, single-family home ownership options. Red Fox Multifamily is based in White Plains, New York, and we partner with investors for whom the stability of real estate investment appeals, but the stress of property ownership does not. We give our investors the benefits of real estate investment through syndication, which is a group investment in multifamily property. So with that, let me admit a few of our new guests here in a moment. Right. And now what I'd like to do is I would like to go over a few logistics before I introduce our guest speaker. So logistics for this evening are very simple. So if you're not speaking, please keep your line muted. Hold questions to the end of the presentation if you can, unless our guest speaker invites you to ask questions throughout her presentation. This presentation is being recorded, and you must know that this material does not constitute an offer or a solicitation to purchase securities. This is for information purposes only and should not be construed as business, financial, or legal advice. And so with that, if you want to stay connected with me, please feel free to email me at Red Fox Multifamily. That is Chris at Red Fox Multifamily. But without further ado, let me go ahead and get started here with introducing our speaker. So our speaker this evening, we're going to go through an introduction, a brief introduction, then we're going to hand it over to our speaker to deliver the presentation and take some Q&A, and then time permits, we'll have a little bit of time to do some virtual networking at the end. So let me go ahead and get started. And so I had the pleasure and honor of meeting Dawn, our guest speaker tonight, at a Brad Sunblock Rat Race to Retirement event, a huge multifamily conference in the Dallas, Texas area this past summer or late spring. And it was just a pleasure seeing her. And I got a chance, I'm sitting in the audience and, I'm seeing all these great things going on. And I see this woman, she's up on the stage and being recognized for some of her achievements in the multifamily investing space. And, I was just amazed by her and all the colleagues that were up on the stage. And then afterwards, I had an opportunity to speak with Dawn in one of the private events that they had at the event, and we just had a great conversation. And I learned a lot about her, and just her passion for things, what she's been doing, not only on the real estate front, but what her professional career has, her achievements there. And I was just so blown away by those things. But I was most blown away by her kindness and generosity, and talking to someone new like me who's breaking into this space on the active side of things. And so Dawn was just so welcoming, so gracious with her time, and lo and behold, I reached out to her to have her come and educate all of us on this great asset class of multifamily real estate, where she's going to talk to us about why we should be investing in apartment buildings during a recession. And with that, what I want to talk about is, quickly introduce Dawn so that you guys get a little sense of her background. So Dawn is a multifamily investor and owner of Crown Capital Multifamily. Since 2019, she has invested in almost 600 units in the Dallas-Fort Worth area. In her 22-year career in sales and project management, Dawn has extensive experience in negotiating with multi-billion-dollar companies, along with expertise in underwriting. In 2021, she joined the elite Millionaire Multifamily Mastermind, and Dawn graduated magna cum laude from the University of North Texas and lives in the Dallas area with her husband, Jason. Dawn's passion is helping others invest in real estate so they can grow their wealth and create a more meaningful, fulfilling life. And so, with that, I'm going to stop presenting and hand it over to Dawn so that she can talk to us tonight about multifamily investing.
Thank you so much, Chris. That was the best introduction ever. You know how sometimes when you meet someone and you just connect instantly. That's how it was when Chris and I met, and I love when that happens. You just have things in common, and you just find a connection. You're 1 minute you're strangers, and then the next minute you're just friends. I think that's just the coolest thing when that happens, and you meet someone that you really connect with. So I feel the same towards you, Chris. I'm honored to be here tonight and with all you guys. So thank you so much for your time and joining us. And if it's okay with you guys, I'd like to just start. I'm going to share my screen, and I've got a PowerPoint that we'll kind of walk through and talk about our very exciting topic tonight about investing during a recession. That's on a lot of people's minds. But before I get started, if it's okay with you guys, I'm just going to kind of share my story, just kind of how I got here, how I got involved in multifamily, and what we're doing. So for me, to be honest, like growing up, we didn't have much growing up, and I was taught just to get a good job and save my money. And that's exactly what I did. I went to college. I was only the second in my entire extended family to go to college. So my sister was the first. So that was a big deal. And I thought that was success. And I got a very good job, and I saved my money. I was a very good saver. I put a lot of it into a 401k, and that's not working out for me really well right now. And, flash forward to today, my parents are now in their 70s. My mom is about to be 70, she's 69, and they're both still working. And I don't want that for them. And frankly, I don't want that for myself either. I don't want to work until I'm 70. And that's a reality that a lot of people are facing right now, is that they are afraid that they're not saving enough for retirement, or that they've reached a retirement age and they haven't saved enough, and they can't retire. I actually just talked to a gentleman just a couple of weeks ago who is a surgeon, makes a very handsome salary. He's 55 years old. And he said, Dawn, I thought by 55 or maybe 60, I would be able to retire. And he's like, that's just not the case with the way the market is right now. And so he's looking at investing in apartments. So I feel like there's a lot of people out there like me that kind of just started realizing that just saving your money or putting in retirement accounts, that's not enough. And there are other options. I didn't even know multifamily investing or apartment investing existed just a few years ago. So I like sharing that with others, because I feel like there's people looking for that. And to me, I started with a single family flip. This was several years ago, and I understand the value of investing in real estate. I think that we can all agree that we understand the value of investing in something that is going to increase in value, right? And I think the disconnect a lot of times is we just don't know how to get started. And that was me. I just didn't know how to get started. Like, I want to invest in real estate, I just don't know how. And so I did a single family flip, and that was not the answer for me. I did one single family flip, and it was profitable, but flipping is like a process. And I was looking for something that that my money could grow exponentially. So I eventually came across multifamily, and it just checked all the boxes for me, exactly what I was looking for. And I'll share some of that with you guys tonight, of kind of like what those boxes were, of like why I chose apartment investing over all the other different investment opportunities out there. So hopefully it kind of just kind of helps you guys guide like where we are. So now I syndicate, like Chris, like what we do is in a syndication is basically a syndication. All it is, it's a group of investors that are pooling their money to buy something. So we are buying 10, 20, $30 million apartment buildings where I can't go out and buy that on my own, but collectively, all of us here tonight could do that. So that's essentially all we're doing. So me and my partners, we do all the work to find the deal, work with the brokers. Like when apartments are listed for sale, there's not like a for sale sign in the front yard, right? So it's there's no MLS. So you have to have the relationships with brokers and really know how to find these deals. And it's definitely a relationship-based business. And so we do all the work, and then we invite other investors who don't have the time to put in the work, but they want to put their money to work. That was like me, how I started is I just wanted to put my money in. I just want to put my money in something that's just going to grow exponentially. So that's really what we do. So we buy these properties, and then together, the cool thing about apartment investing is that we all own these properties together. We're all co-owners of these properties, and we all share in the profits. So we're buying existing properties, and we improve the condition of the properties and improve the operating efficiency, and then we sell them for a profit. So that's kind of really what it is in a nutshell. That's kind of how I got started in this. And like I said, I just like sharing that with other people. Just like there are other opportunities out there, and that's what I was looking for. And I like sharing that with others. So I'm going to go ahead and share my screen now. So I'm using a dual screen. So you guys bear with me for 1 second while I switch gears here. And let's see. Do I have you gave me the ability to share, Chris?
Yes.
Yeah, I see it right here. Okay, so I'm going to do. I'm going to share this one. And then.
We can see.
Perfect. Okay, let me hide that little sidebar. So yeah, so we'll kick it off to a very fun topic tonight, because I know it's probably on a lot of our minds is, what's happening right now in the market. So why invest in apartment buildings during a recession, or should we be investing? So that's what we're going to kind of talk about tonight. So here we go. I'll probably just I kind of covered a little bit in this slide already, just what we do and why. So essentially we're buying multi-million-dollar apartment complexes. We call them multifamily, improve the condition of the property, and then we sell it for a profit. And so this is really just, it gives other investors an easy way to get into private deals, right? And then we all share in those profits. But one thing I really love about this business is we actually are improving the communities themselves. And I was just at one of my properties. We just held it during Thanksgiving week. We did like a Thanksgiving lunch feast. And I was talking with some of the residents, and one of the residents said to me that she's lived there for 4 years. And during that time, she's seen a huge improvement in the condition of the property. And she's like, I can just tell that you guys care, and you're putting a lot of effort into making this property nicer, and just, this is their home. So that was, you guys, like, that was so rewarding to me, just to hear that from residents that we're really making a difference in their community. So 2020 year in review. So we'll kind of look at like this crazy year that we've had, because it has been quite the ride. We started out this year with an absolute buying frenzy, or selling frenzy, I guess, depending on which side of the equation that you're on. but between like extremely low interest rates, this is Q1, right? It's low interest rates. We were seeing record-breaking growth, historical low vacancy, and all of these things combined were the perfect formula for apartment investors. And those of us investing at that time were making great returns, right? Now, as we close out Q4, that's an entirely different story. We've seen 6 rate hikes. It's crazy. 6 rate hikes, taking the Fed funds rate from practically 0 to 4% in less than 8 months. The rate at which that has happened, we haven't seen that. That's the fastest that's ever happened in several decades. So it's been crazy. And we've all felt that, right? Inflation reached 9% this year. I think it topped out at 9%, like I think June-ish. But the average for the year overall was 8% for the year, which is the highest it's been in 40 years. Crazy. It was a really crazy year. So next, recession. I put a question mark on there because I kind of want to talk about this. So yes, like the word recession, we've been talking about that for a while, especially after this summer when we saw 2 consecutive quarters of GDP being down, which is commonly how a recession is defined, right? But then there's some other things that kind of are interesting to look at. So in Q3, GDP was actually higher than predicted at 2.9% versus 2.6. And then there's some other things that kind of go hand in hand with the recession that we're not seeing. For example, unemployment. Usually when we're in a recession, unemployment is really high. And we're not seeing that right now. Unemployment is still really low at 3.7%. So that's really interesting. And those are some positive things that we're seeing in the industry. But then, let's be honest here. The R word, the recession that's being thrown around, it has a lot of people spooked. And I've had a lot of people ask me recently they say, Dawn, I want to invest, but is now a good time with these rapidly raising, right? And the way that the interest rates are rising so rapidly. And I'll answer that question. And I know we want to talk about that tonight too. So before we kind of go down that path, I want to talk a little bit more about just like a recession and just what we've seen historically. So here's what we know about recession. So since the 1800s, the average recession is 17 months. In the last 75 years, the average is 11 months. So it's not really fair, I think, to compare like the 1800s. We're in a totally different economy than we were in the 1800s. So even the last 75 years, I would argue, is a completely different world we live in. But even so, 11 months is the average recession, like less than a year. That's not bad. So just keep that in mind. And then we've got the rate hikes. So typically from the first rate hike to the first cut, the average is 2.2 years. So our first rate hike this year was March. So we're about 9 months in, which means, okay, yes, we may not see any cuts until maybe like the end of 2023 or maybe even early 2024. So we definitely need to prepare for this. But there's a few things that we can do to manage these crazy interest rates that we're seeing right now. But number one, we can kind of see prices have come down. So the good news is we're not overpaying for properties like what was happening earlier this year. And because there's not really much you can do about if you overpay for a property, right? You're kind of stuck with it. You basically have to ride it out until prices come back up. But if we buy now at a lower price, we can always refinance once interest rates come down. Then there's options for doing a loan assumption, which means essentially taking over the current loan on a property. So you might have, I just saw one recently that was the seller, they had, I don't know how many years left, but you can find loans that have 5, 6, 7 years left on the existing loan. And the new buyer is able to assume that loan, take over that loan for them. I saw one recently that was at 3%. So there's still some opportunities to do a loan assumption. That's a great way to go. And then you've got, right now we're looking at the options of doing, if you're doing a new loan, you would look at doing a fixed rate or a variable rate. And there's benefits in each and one of those. Like a fixed is great because you know exactly what your payment is going to be the entire duration of the loan. But variable is not bad either right now, because if you think about you're going to be paying a higher rate now. But if we're going to hold a property, and I'll talk about, like, we hold our properties, we usually look at a timeline of 5 years, and rates are likely to come down a lot in the next 5 years. So the variable rate, you can take advantage of. You're paying a higher rate now, but you can take advantage of when those rates drop, that now you're into a much lower rate. Plus, you can also buy insurance, kind of. It's called a rate cap. You can buy insurance on a floating rate, a variable rate. That means your rate is not going to go over a certain amount. So that's definitely, we can manage our interest rates using that as well. And then lastly, lenders are lending a lot less money, which means we're putting more of our own money into the deal, kind of like a down payment on a house. Think of it like that, right? So the more money we put down means it's less risky overall. So that's a good thing. So conservative analysis. So this is kind of just like a snapshot of how we, a little bit into a recession. So when we hold properties for 5 years, this is really part of the reason why we plan on holding for 5 years, even though a lot of times we will sell for less than that. If the market conditions are right, we want to sell as soon as we hit our projections. We're giving investors a great return, and we'll sell or refinance a property if we've hit those projections. But we underwrite the deal for 5 years, meaning we're planning on holding the property for 5 years, that 5-year timeline, so that way we can withstand any market downturns or a recession and still come out with really solid returns. So what we're seeing right now, and this is, I'm going to show you an example in a minute of a property that we just bought in October and what that looks like. But we are definitely seeing lower cash flow. We used to see 8 to 10% cash flow a year. And that cash flow means that's money, that's kind of like dividends to passive investors. That's an annual dividend, or it's paid quarterly, but that's your annual 4 to 5%. So cash flow is definitely lower. But overall returns are still really strong at around 100%. So that's really, really good. We're seeing some really solid returns. But and then, keep in mind, so, actually I'll explain this in a second, but just to kind of, for anyone that's new to investing. So when we talk about the overall returns that over that 5-year hold, it's a combination of those cash dividends and then what you would get from the sale or refinance of the property. So once we sell the property, you would get some capital gains there, right? So what that means, for example, is if you put in $100,000 investment, that you would make $100,000. So your actual total return over the whole life of the investment would be $200,000. It'd be the $100,000 that you invested plus $100,000 in your profit. And I'll show you an example of that in just a minute. But then, also remember that we were in a recession in 2020, albeit it was a short one. But apartment investors who bought during this time when the market was down had some of the best returns ever. So buying during a recession at a time when a lot of other people are scared to do so can provide some of the best opportunities. If I'm being completely honest, I was buying on Wall Street in March and April of 2020 when everyone else was selling, because it's a good time to buy, right? Is when things when you see opportunities. I was buying some blue chip stocks, and I'm like, these companies have been around forever, and they're going to come back. So as long as you're buying something smart, when you see an opportunity, take it, right? So again, the 5-year hold allows us kind of just to recover from a recession, bounce back, and there's still buying opportunities in every market cycle. A recession is really just, it is a normal part of an economic cycle, right? There's going to be peaks and valleys in any economic cycle. It just means that we evaluate the deal differently. So here's an example. This is an actual a deal that we just bought in October. So these are projections for this deal. It's here in Dallas, where I'm based, here in Dallas. And this is just kind of what that looks like, so you guys can have a better idea. So you can see the average the annual cash flow is going to be 5%. So it is a little low, but then you look at the total return that we're projecting on this deal is about 100%. That makes the IRR, the internal rate of return, which is kind of just an average annual return. What does that look like? Is about 20%. And then that's a 2x multiple, meaning basically we're projecting doubling your money, right? So if you look at the timeline for that 5-year hold we talked about, year 0, that's the year that we buy the property. So it's $100,000. Let's say you just did $100,000 investment. These years here, 1, 2, 3, 4, 5, this is the cash flow that you would get. So you can see it starts out really low because we're putting a lot of money into the property, but then it increases, right? So your average cash flow over the 5 years is going to be, not your average, your total cash flow would be about 25,000. But then your proceeds when we sell the property would be 175. So your total return is that 200, which means that your original 100 that you invested plus another $100,000. So I just wanted you guys to see kind of an example of what that typically looks like. So here's what we're seeing now in the market. Real estate prices are down. This is what we kind of talked about this. Real estate is down. We just got this same property, we got a 20% discount on the purchase price. So, I mean, when's the best time to buy something? We talked about it's when it's on sale, right? So it's kind of like real estate is on sale. There's also significantly less buyers in the market right now. I used to be the one that was calling the brokers, like trying to track them down, and now they're calling me. So that's kind of a good thing because this is a relationship business. And so it's a great time for developing some of those broker relationships right now. And plus there's less competition, right? So that's nice as well. And then there's some apartment owners are going to need to sell soon. They either got in over their heads or they didn't buy that insurance. We're talking about that rate cap or reserve enough money to withstand these rate increases that we're seeing, and they're going to need to get out. So there's going to be some opportunities there as well. And then there's the supply issue, right? So analysts are estimating that there is a home shortage of anywhere between 2 and 6 million homes in the US. And it's going to take about a decade to catch up with that. So then there's also fewer qualified homeowners, right? So some people, sadly now, because of interest rates, are not able to qualify for purchasing for a mortgage, and that's kind of price people out of buying a home. So where are all these people going to go? They're going to go to apartments. This is going to continue to drive demand for renters. And then think about this too. So you also have to qualify for rent on an apartment. So as the higher rents are right now, that the rents are really high, a lot of people aren't going to be able to qualify for some of the A class, or let's say, so anyone kind of new to investing, we classify apartments in like A, B, C, D, right? So think of maybe a B, and B's are, let's say C is like a 70s property, a B property would be like 80s and 90s, and then anything newer than that is going to be an A class. And then of course you've got new development as well. We primarily focus on B and C class, and I'll kind of explain that in a little bit of why we focus on B and C class. But for anyone maybe who now is going to be priced out, is not going to qualify for living in an A class apartment, is going to be kind of pushed down to a B class, which is where we are. That's our area of expertise. So that's happening as well right now. And then rents have dipped a little, but rent growth is still much higher than average. I'm going to use DFW as an example because that's where I'm based and that's where we invest, and you're stuck with me tonight. So we're going to talk about DFW a little bit tonight. So rent growth is nearly 11% in DFW over the last 12 months. That's well above average. I think the average is around 4%. So rent growth is still really strong. And then the average occupancy is about 92%. And these numbers are actually even higher in some of the right submarkets. The same property I mentioned earlier, we are seeing a 22% increase in new leases. That means 22% more than an existing same floor plan from a current resident to that same floor plan for a new lease is a 22%
Awesome.
increase in rent. Yeah, it's incredible. Oh my gosh. So here we go. So why invest in apartments during a recession? So number one, it's a hedge against inflation. As we discussed earlier, so we've got inflation hovering around 8% this year, right? And so if you're taking a wait and see approach, and if your money is just sitting on the sidelines, then you are losing money, period. I mean, if you've got $100,000 sitting in a bank account, then you lost $8,000 this year by doing nothing. But just for fun, like I like to just put this in perspective. So you guys know tax-free weekend, like where there's no sales tax. You can just on, shopping. I think it's like right before school starts, right? So you do like tax-free weekend. I stay away that weekend because it's like a madhouse, but I know some people that go crazy during tax-free weekend. I'm sure it's none of you out here tonight, but they go crazy for tax-free weekend, and they go out and spend all this money. Like they're buying clothes and shoes. And our sales tax, guys, in Texas is 8.25. It's pretty much the same as inflation is right now. And so I would ask these people, okay, wait, so like, why are you not doing anything investing though? You're like willing to go crazy to save 8.25 on sales tax, but you're not doing any investing with your money that's losing 8% by just sitting there. And we're not talking about like saving $8 on a $100 shirt. We're talking about saving, $8,000 on a $100,000 sitting in the bank. So I just think that's funny, and just like a funny way to kind of look at it. But it's true, right? It's like this. I mean, it's the same thing. So just thought that's funny. But so here's something. Forbes put out an article recently that said multifamily has been a safe haven for many investors as rent growth has historically outpaced inflation. So really, by investing in apartments, you're protecting your hard-earned money, right?
Mhm.
So number two, stability. The S&P is down the S&P 500 is down 18% this year. My 401k, I think, is down like 30%. So I don't know what I'm doing in my 401k, but it's ugly. So we won't talk about that. But so, what's the first thing that happens when there's uncertainty in the economy? The stock market takes a direct hit. And this is why we've seen so much volatility in the stock market these past couple of years, right? So here's something, check this out. Multifamily was the strongest performing investment class during the pandemic. Isn't that crazy? So, I mean, if that tells you anything. So if you were in the stock market, you lost money. If you were in retail investments, you lost money. If you were in hotels, you lost money. But if you were in multifamily, you probably didn't. It was actually really stable that whole time. And then, of course, when we came out of 2020, it skyrocketed like nobody's ever seen. So, and Forbes would agree with me. Forbes said multifamily investments averaged over a 10% annual return. I'd argue that our investments even get better returns than that. But over the last 10 years, outperforming riskier real estate assets. During this time, private real estate investments, that's what we do, experience substantially lower volatility than public markets, i.e. the stock market, right? An example of this would be viewing the public market's reaction during COVID-19. Public markets experienced substantial volatility while the market for private real estate transactions remained relatively stable. Pretty cool.
Very cool.
Pretty cool. I know, I love it. So number three, appreciation. So appreciation is really just increasing in value. And that's one of the reasons we love multifamily investing, is that the value of the property increases, which means that our investment increases along with it. I've had a lot of people ask me, like, Dawn, buying will be a good investment? And talk about a lot of different things, but sometimes I ask a really simple question. A lot of my I think real estate in DFW will be worth more in 5 years or 10 years than it is today. And every single person says yes. I mean, history shows us that real estate goes one direction. Now, I don't mean there's not fluctuations and recessions and dips in the market. Absolutely, there are. But overall, real estate only goes one direction. And even in 2008, right, in the housing crash, 2008, like DFW wasn't impacted nearly as much as the rest of the country because it was such a strong growth market. So that's what we look for. That's one of the things we look for, is those really strong growth markets. I just happen to live in one. And then we mentioned the rent growth, right? So I mentioned that rents in Dallas are up about 11% this year. And what that means to us as investors is when rents increase, the revenue of the property goes up, which means increased profits for the owners. And that's you and me as investors. And then the annual emerging trends in real estate markets to watch report just came out. And it has DFW is projected as the second best market for real estate in 2023. So that's pretty cool. It's second to Nashville. Nashville's number one for 2 years in a row. And so we're also looking at Nashville. It's on fire right now. But DFW even ranked above Austin, which anyone knows that Austin has been on fire these past few years. So that was pretty cool. So you got to strike when the iron's hot, right? We're in a great market right now where it's still growing and still showing that growth, projecting. We look for all the indicators of employment. We have a lot of corporations and move their headquarters into the DFW area. So we look for things like that, right? And that shows that there's going to continue to be that growth in these markets. Number 4, strong demand. People are always going to need a place to live, and then of course, as we discussed earlier, there's a huge supply shortage, which is going to take years to catch up. And with these, ongoing supply chain issues and labor shortages, and that's just going to continue to drive demand up. But I do particularly love B and C class versus new development. And that's because, we're not competing with new development. So B and C class, you're always going to have like a built-in tenant base because there's always going to be a need for that B and C. These are, 70s, 80s properties. You can't replace that. Right? You can build new development, but we're not competing with that. Our tenants are not looking to live in a new development property that's outpriced of what they can afford. So there's always going to be a need for that B and C class. Now we love to see new development because it's an indicator of growth, right? So we like to see that, but we're not competing with those properties. So I like that. And then we discussed how, sadly, there are some people that no longer qualify for a mortgage as construction costs continue to rise. That makes home prices increase, and it makes home ownership unattainable for some people. So this is going to continue to push people into the rental market. And then number 5, this is lastly here is tax savings. This is one of my favorites. It's not as well known as it should be that multifamily has some tax benefits that you don't get in other real estate investments. And I'm not going to go into too much detail on what a cost segregation study is and bonus depreciation. I'm happy to kind of, can do that on another night. I don't want to bore you too much, but there are some tax benefits the government has put in place, incentives, and where we can take advantage of the depreciation of properties. But essentially, just like really briefly, I kind of put in examples and kind of look at what this looks like is if there's anything that's not attached to the property, like appliances and fixtures, those items depreciate over time, right? So let's just say it's a dishwasher, right? So we have dishwashers in our apartments and all of our units. And I'm not sure if dishwashers are 5 years or 10 years, but let's say that the lifespan of a dishwasher is 5 years. So essentially after the end of the 5 years, that dishwasher is worthless. And so we're able to take that as a loss, right? That's a depreciation that is no longer of value to us. And so what the tax laws let us do is put these different items that depreciate into different buckets. And then we can take there's a tax law called bonus depreciation, where we can take all of the depreciation, all of that loss in year 1, the year that we buy the property. So for example, I did a couple years ago, did a $100,000 investment as a passive investor, and got an $86,000 loss on a K1. So our CPAs do the work. They just issue K1s for everyone. So you don't have to do anything. You just have to give it to your CPA for your taxes. But it showed an $86,000 loss from that depreciation. So I can offset that $86,000 loss to any profits that I make. So let's say that we bought a property, and then let's say we're going to sell this property next year, right? And so looking at this example here, so if we did no depreciation and you made $100,000 profit in your investment over here, if you were in a 30% tax bracket, you would pay $30,000 in taxes on that investment, on that profit. But let's say over here with depreciation, that bonus depreciation, that same $100,000 profit, we take that $86,000 loss on my K1, and that takes my profit, as far as Uncle Sam's concerned, takes it to $14,000, which means then in my same 30% tax bracket, I'm only paying $4,200 in taxes. So which would you rather pay, $30,000 in taxes or $4,200 in taxes? It makes a huge difference, right? So, so I love that. So that's just another benefit that we have to multifamily.
Absolutely. And Dawn, just jumping in on this one, I mean,
Yeah.
when I got into syndications in particular, the tax benefits were one of the biggest ones, because one of the things that they say in our space, as you know, is that it's not necessarily just the money that you make, but it's also the money that you keep. And when you can offset
Yes.
your passive income in this way, it's a tremendous benefit. And there are very few, if any, other asset classes that provide these types of tax benefits to investors. And so, thank you for sharing this. This is a great example of the power of this thing.
Yeah, yeah, I know. That's why I was like, it's one of my favorites. When I first got into multifamily, I didn't even know that this existed. So I was like, well, that's a great bonus that you get that.
Oh,
And so,
yeah.
yeah, if you guys are looking to invest, and unfortunately, bonus depreciation is being phased out. So 2022 is the last year where you can get up to 100%. I think 2023 it goes to 80%, and then 2024 is maybe like 60%. So we're phasing it out, but we still have some opportunities. So I would definitely invest sooner rather than later because of those tax benefits. We don't know that that's going to get reinstated. So yeah, definitely take advantage of that. So all of these things combine to create some really great buying opportunities for those of us that are willing to look for them, right? We've got two options here. We can kind of sit on the sidelines and wait and see, or we can look for those opportunities. So just like in 2020, the same thing happened in 2020. You have those two groups of people. You had one group that wanted to wait and see how the market played out. And then you've got another group who was willing to put in the time to do their homework and found some of the best deals that we've seen in quite some time. I was in a passive investment during that time, and we were seeing in people that were bought properties in 2020 were selling them 18 months later, and we were seeing 150% returns. I mean, that's insane. That's not normal, by the way. That's not normal. And can I throw in a quick disclaimer that I'm not a tax attorney or anything? So definitely consult on that last slide. Consult your CPA and your tax attorney, but this is just from my experience, because that is a real example that I have an $86,000 loss on my K1. So I'm just sharing from my own personal experiences, but yeah, some of these, sometimes, during times when the market is down, sometimes those are the best times to buy. It really is like, you just have to look for the opportunities. You just have to look for what makes sense, and underwrite it differently. So yes, we are still buying multifamily. We're just being very selective on what we're buying and making sure that the financing structure makes sense. And for any of you that are interested in coming in as limited partners, which is basically a passive investor, right? So and again, that's the coming in where you want to put your money to work, and you don't want to do all of the work. You don't have the time to really find the deals on your own. There's opportunities for you to come in as a co-owner, as a limited partner. We do all the homework for you. So we do the work for you, and then you have an opportunity to review the deal and see if it's something that you'd like to co-own with us and put your money to work. But overall, there's still some really good deals and good opportunities right now. We're also seeing there is a huge shift out of Wall Street happening right now. There are a lot of savvy investors that are looking for other opportunities, looking for different ways to invest their money. They're kind of tired of the volatility. They've gotten burned, and looking for something that's more stable, that's not only going to protect their wealth, but is going to grow their wealth. And that's me. That was exactly me. And so that's why I like sharing that with others that just don't even know this exists. And then I was telling Chris too that I also host a meetup here in Dallas, and do the same thing. I like just helping provide that education and really helping people grow or get started, even just like where do I start? So I hope this was helpful for you guys. I'd love to chat more with each and every one of you. If you'd like to contact me, you can email me. It's probably the best way to reach me. This is my email address here, dkellerinvestments@gmail.com. Happy to do like a one-on-one call with you. I also have a free gift for you guys. It is 10 tips to make your money work for you. So if you're interested in receiving a copy of that, just email me and ask me for that, and I will send that over to you. But really, I'd love to help in any way I can. We work so hard for our money, and whether you're looking for ways to protect your money or grow your money, you're looking for tax shelters, or maybe you're just like me and you don't want to work until you're 70, or you don't want your parents to work until they're 70, or kids when they get older, or you want to create, legacy wealth for your kids and your grandkids. You deserve the best for you and your family. And multifamily really helped me really just gave me an opportunity, just gave me I feel like it gave me a huge advantage to get to my investment goals faster, my financial goals faster. So again, I hope this is helpful for you guys, and I'm happy to answer any questions, and we can always go back to slides, or I'm going to probably stop sharing, but if you guys have questions that you want to revisit a slide, then we can go back to that if you have any questions on a particular slide that we talked about.
Absolutely. Dawn, thank you for that excellent presentation. I mean, you covered on so many great things and provided a lot of value to everyone. So I do encourage anyone that has a question, please do, come off, take yourself off of mute and feel free to ask questions. And Dawn, just to let you know, you can, if you hit stop sharing, you'll stop sharing your screen.
Oh, thank you. Yeah, because I'm still sharing, aren't I?
There you go.
There we go. I know the dual screen thing is always tricky. Sorry, guys. Yeah.
It is. No sweat. But yes, Luis, do you have a question?
Yeah, I sure do. And this is for both Dawn and Chris. I was wondering if I could get a little bit of guidance, because basically what we've done up until this point in real estate is single family. We've created a pretty good sized portfolio, and we've done this, and so we're pretty comfortable with like shifting to multifamily. And but we have a construction company, and so we do like all the work and all the the rehabbing. We do everything ourselves. So and Dawn, that was a fantastic presentation, and I really appreciate it. I don't know if we're looking to invest like passively. We're actually looking for some deals, some value add opportunities, and seeing how we can actually build a multifamily portfolio. So I was wondering if I could get some guidance as to perhaps where we can start, maybe some resources, because again we have the knowledge and the manpower. We're just looking more for some like the deals, maybe the financing, things like that.
Absolutely. Yes. Yeah. Great question. I started, I'm a big believer in education and mentors. I believe this is a business that it is, it's kind of like who you know, and having a name behind you. It's really difficult sometimes to get in just, unless you're doing smaller deals. We look at deals that are usually around 100 units or more. So if you want to scale that big, I would definitely recommend joining a mentorship program that's what they help you do. My mentor is Brad Sumrock, and I can give you information for him, and I have like some discount codes, like when he offers deals online, or like his education program. If you want to look at that, if you're looking at something more, if you want to just go like to a 20 unit or 30 unit, something like that.
Right.
Think you absolutely could go direct to brokers. And if you'd like, I can give you some names of some what area are you in?
So we're in Houston, but we've invested all throughout the surrounding areas of Houston. I mean, it'd be great if you can help us out anyway. I appreciate that.
Yeah. So I can, I know some, brokers in they're mostly in like North Texas, but they always know other brokers in Houston and other cities, other areas. Right. So, I can definitely give you some brokers that I know. And then, if you want to do like more like a 30 unit, 40 unit, you can definitely just go straight to brokers and just get on their listing. Just tell them exactly what you're looking for, and they'll start sending you their listings. And then there's tools for underwriting deals when you look at properties of that size. You can find some free resources online about how to underwrite deals. Some of the paid ones are definitely better. So it's just really, I'm a big believer in investing in, if you really are serious about this, if you want to be a doctor, you pay a lot of money to be a physician, to go to school. Like this business is no different. If you want to do it right, you can read books all day long and listen to podcasts. And we get great education by sharing things like tonight, right? But to really get the tools, like hands-on tools that you need, it's worth paying a little bit of money to get that. It's going to get you there faster. But definitely, yeah, I'll email me if you caught my email address, and I'm happy to connect you with some brokers.
Absolutely. And now, actually, I was going to
Okay.
just throw in, and I agree with everything that Dawn just said. And what will happen over the weekend, in fact, I'll package up this recording. I'll send Dawn's slides as well as all of her contact information to everyone who joined tonight, and all the people who registered for this event, the 30 plus people that registered for the event, so that they can have the contact information and then reach out to Dawn for whether it's, hey, I'm interested in passive investment opportunities, or I'm interested in maybe getting some insights around how to break in as an active investor. But great question, Louise. Thanks for asking. And yes, I will circulate all that contact information as I mentioned. And I see that Heidi has her hand up. Heidi, thanks for joining. Please ask the question.
Yes. Can you hear me?
Yes, we can hear you and see you.
Yes. Thank you so much, Dawn, for that insightful presentation. I love it. I love it how you put in simple ways what goes over the head of a lot of people, new investors that don't understand. In simple words, for example, bonus appreciation, like how in simple numbers you pay this much or this much versus having no depreciation and having depreciation. So that was real cool. And I'm going to copy on that one. I'm going to copy you, and I'm going to explain it like that to my investors. Just like you, I'm a big believer in education. I love education. I'm myself an educator. And of course, mentorship. You got to hang out and you want to emulate your role models and emulate them. Yeah, you want to be as good as them or better. I don't know. You're gonna aim it really big. So I just joined Michael Blank Mastermind. It's so amazing. I'm so excited. I'm feeling like I'm kicking butt. And we're hands-on SDAs, and we meet up regularly and we analyze deals regularly. And like I've been benching all the videos and all the education that he has there. I love it. It's amazing. I think the way he puts it, it's like it's so much. I feel like I'm drinking water from a fire hose. But the way he breaks it down small chunks, I think you just like need to put one foot in front of the other and you're gonna get there. So I really love that. So right now I am calling brokers, lenders, and building my badass team. So I will ask you to please send me the contacts for brokers. That will be really amazing. So I'll send you an email, and then I would just let you know
do that.
that
If you will, just email me and we'll connect. Yes. Happy to help.
Thank you, Heidi.
Great.
Thanks
Thank you so much.
I'm excited for you and the mastermind and everything that you're learning and everything that's really cool. Yes, I love it.
Thank you.
Definitely.
Thanks.
Awesome. Any other questions before I have a few questions to put Dawn on the hot seat for a moment before we break for the evening. So any other questions for anyone? I don't want to steal the microphone entirely if you have a burning question. Otherwise, I'll go ahead and I'll put John on the hot seat, ask the questions, and we'll break for the evening. And as I mentioned, I will circulate the contact information for her after this meeting. So I will go ahead and ask some questions. So Dawn, are you ready?
I'm ready. Uh-oh.
All right. So I ask all the investors that the investors and expert speakers like yourself who come on, a few key questions just to help us get a little bit more insight into who you are and sort of how you operate. And you shared some great a great opening story about how you were taught, go to school, get a good job, all those types of things. And then now you are well on into your journey as a real estate investor. So with that in mind, can you tell us a little bit about what does financial freedom mean to you?
What does financial freedom mean to me? To me, it's about doing the things that you love most in life. We talk about growing our wealth, but I think I'd be willing to bet for most of us that it's not about money, it's about time, right? It's we want time for things that are most important to us. We want time to spend with our family and our friends, and doing the things that make us happy in life. And I kind of think of work, what we do to make a living. It's kind of like a marriage or a relationship, right? And I was in the wrong relationship for a long time. And once I met my husband, it was night and day. And I knew in my heart that I was in the right place. And I feel like it's kind of the same thing when in your career, what you do to make a living, it's kind of the same thing. And I think if what you're doing is, if it's not fulfilling to you, if it's not adding to your life, if it's doing the opposite, if it's sucking the life out of you, then there's a good chance that you're in the wrong place. So to me, financial freedom is really just being in the right place. It's being able to do those things that are most important to us in life.
It's awesome. I couldn't agree more. Um, Another thing that I wanted to follow up on and ask about is, for me personally, I love to travel. My family loves to travel. We're like infusing that into our little mini me's here, and for us, like we've done so many great trips. But I always like to ask folks when they, what about you? What is one of the best trips that you've ever taken, and why was that?
Oh gosh, I do love traveling. Yes, we definitely have that in common. I love traveling. Probably one of the most memorable that stands out is in 2019, my husband and I went to Paris, and we also went to Prague on that same trip, also very cool. But Paris was a bucket list item for me. So I think anytime that you can do something on your bucket list, something that you've dreamed about forever, is always just, I mean, it's so cool. So we had an amazing time. And also, I think because that was in the summer of 2019, and a year later, seeing so many people having to cancel their dream vacations and weddings and graduations and everything, and that was so hard on so many people. So I feel like I felt especially blessed that we took that trip when we did, and had that experience when we did in 2019. I felt especially grateful for that. It was fun.
So cool. I mean, I haven't been to France, but never to Paris. Prague is on my list as well. When I go, I'll be reaching out to you for some tips on
Yes.
what on
Yes.
the
Oh,
hot
so
spots for
cool.
sure.
So
Okay,
cool.
I have two more questions for you. Um, the next question is one where you mentioned that you're working on growing your meetup in the Dallas area as well, and
Mhm.
that's a cool thing to be working on. I know the work that it takes to start something like that. Maybe you can share a little bit more about that, but also talk about anything else that you might be working on these days.
Yeah. For anyone that maybe had jumped on earlier when Chris and I were catching up a little bit, we did talk about that. And, I have been spending a lot of time on my always educating myself. Just I'm looking at different education opportunities and then sharing what I'm learning with others. And so, like as Chris said, started my own meetup earlier this year in local here in Dallas, and so many people help me along the way in this business, and I like paying that forward. And especially people that are brand new to this and just don't know, they don't know that how I want to invest in real estate. I just don't know how. And so helping them kind of get started and, getting them off to a good start and pointing in the right direction. And so I'm really focusing on building that community in my meetup. And it really is truly a community. This is where we share and we grow together. And one thing I love about this business is that we're always encouraging each other. I've never seen anything like this in any other industry, but we're always encouraging each other. We're always pushing each other to success, and And I love that. And I think somebody may have already been on when we were talking about Jesse Itzler at the very beginning before we started. I've been working a lot on personal development, and that's something that we do in this business as well. It's not just about your business. This is about life, you guys. I mean, this is our livelihood. This is really just, it goes way beyond wealth and money. This is our life, and we focus so much on what's important in life. And I recently just went to an event with Jesse Itzler, and if anyone follows him, he does some hardcore stuff. He does these ice baths for 3 minutes. Actually, he probably does it longer than that. I did 3 minutes. Did these, I climbed I have a fear of heights. I climbed a rock wall that was 60-foot rock wall. That's something I would never do ever. And just the whole thing was just about pushing past your fears. And, that's really what we do. We just encourage each other to just push each other, and that helps us just grow and be stronger together. So that's really what I've been focusing on a lot.
That's so awesome. And I couldn't agree more. Again, like when you're in this space and you go to these conferences and being in a room with like-minded individuals and all growing together and pushing each other, I think it's contagious, and it's actually, great to be around. And wherever I go, I try to seek out those people to keep fueling me, and hopefully I'm doing the same with them. And I definitely got that vibe from you, as you mentioned earlier. The last question that I have for you this evening, and you talked a little bit about this just a moment ago in terms of investing in yourself, personal development, and being able to break past your fears, and that kind of leads. The name of this meetup is Wealth Mindset, and mindset was chosen intentionally. What does having a wealth mindset mean to you?
Yeah. Even the word mindset, we use that word a lot in our business. And I think I've realized that a lot of other like in the corporate world, we probably don't use that word as much, the word mindset, but we really should, because it's so important. And really, mindset is just, it's how you view things, and what you're focused on and what you believe, right? So it's if you think you can, you're right. And if you think you can't, you're right. It's just all in like what you believe and what you're telling yourself. And I feel like we're telling ourselves something all the time, whether we realize it or not. And so it's really important to be telling yourself the right things, right, of what you're feeding yourself. And, so wealth mindset, I guess, really, again, it's not about the money, but it is definitely about abundance, about giving, about serving each other, helping each other, serving our families, our communities, our world. I mean, that's really what's most important.
Awesome. Well, I mean, that's a drop the mic moment right there. So I think there's nothing more to follow up on. So what I'm going to do right now is just thank you, Dawn, for taking the time out of your busy schedule to share your knowledge and insights with us. And I learned a lot this evening. I'm sure all of our guests did as well. We appreciate you for doing that. I'm going to circulate your contact information, the slides, the PDF version of the slides that you shared this evening, as well as link to your website, to the entire list of folks on our almost 900 member, or almost 1,000 member meetup group that we have here, plus all the people that registered for the event as well. They'll get your contact information. They can reach out to you, follow you on Facebook or LinkedIn, and just be able to be in your sphere so that they can keep soaking up that great energy and knowledge that you have. So thank you again for your time.
Thank you. Thank you so much, Chris, and all of you guys. It has been my absolute honor to be here tonight. So I appreciate you guys so much.
Appreciate it. Thank you. I'm going to stop the recording.